Okay, this is just a 10-minute accounting basics mainly for economics students. Nothing advanced, just preliminary idea of accounting. Let us start with a daily life example. Suppose you are a college student living by yourself, distant from your parents, and you have to make your own living. Because you are living by yourself, you keep your own allowance record, allowance book. Suppose that at the end of August you have £2,000 asset. You have £1,900 in cash, and also your best friend Tom owes you £100. So the total asset you have is £2,000. During the following month of September, you are engaged in several economic activities. You have several income sources. You get allowance from your dad, £1,000. You also do some babysitting, earning £50. You also have some part-time job of website designing, getting £200 from your client. You also spend some money. You pay rent and utilities, £450. You pay for your phone and internet, £80. You buy some food and drinks, £300. You see your dentist, £200. The autumn season is just around the corner and it was getting a little chilly, so you bought a new jacket for £50. But there is a remark: you forgot your wallet and asked your friend Sylvia to pay. But still you spent your own money, £50, because it wasn't present from Sylvia. You owe her £50. You also bought a new laptop for £800. Also, you start to feel that your best friend Tom will not be able to repay your £100 sometime soon. Tom is a trustable person, but he is currently suffering depression and financial difficulties. So although Tom is saying that he will definitely repay, personally you give it up. Okay? You don't tell him that he doesn't have to repay because that will make him feel bad. You just say, oh, you can repay whenever you can, but personally you give it up and you erase this £100 from your asset. So during this month, your total income is £1,250. Your total expenditure is £1,980. So the difference is your net income. 1,250 minus 1,980 equal minus 730. So you actually spent more than you earned. Consequently, the amount of asset you have at the end of September is £1,270. You started this month with £2,000. You spent £730. What is left is £1,270. The amount of cash you have, however, is a little different from this number. Remember, when you bought this new jacket, you didn't use your own cash. You used Sylvia's cash. So your cash is actually £50 more. You have £1,320 in cash, but you owe Sylvia £50. So the net asset, the asset that belongs to you, is £1,270. So it's simple, right? And it's good enough for your allowance book. At the beginning of every period, you start with some amount of money. During the period, there are some inflows and outflows, which leads to a different amount of money at the end of the period. And you repeat this every period. Very simple. But this is not very convenient for business for many reasons. Imagine that you start a small business, say a website designing company. It is a good idea to make it more explicit who owes how much to whom. Also, for business, purchase of a large equipment itself is not considered cost. It getting old is cost. It's like, suppose you buy a brand new luxurious jacket for £500 and your mother complains saying you wasted £500. You can say, well, I didn't really spend even a penny. It's just £500 cash has become a £500 worth jacket. Your mom might say, that's ridiculous. and she accidentally spills coffee over your brand new jacket, now you can say, okay, I've just lost 50 pounds. This jacket was worth 500 pounds, but it's no longer worth 500 pounds. It's now worth only 450 pounds. So I've just lost 50 pounds. That's the idea of depreciation. Let's look at an example starting with a balance sheet. Suppose you successfully convinced your uncle and borrowed 5,000 pounds from him. Suppose you also pay out of your pocket another 5,000 pounds. So this is the money you start your business with. So on the right hand side of your balance sheet is the liabilities and equity, 5,000 pounds from your uncle as liabilities, and another 5,000 pounds from your own pocket as equity. The total is 10,000 pounds. So these are the sources of the funds. Now with this 10,000 pounds, you purchase some computers and other equipment and softwares where you are going to start web designing company. So you need some computers and other equipment. You spend 4,000 pounds cash on them and you keep the rest, 6,000 pounds in cash. Again, the sum is 10,000 pounds. So the right hand side is the sources of the funds, while the left hand side, the asset account, is the forms of the funds. So more casually speaking, the left hand side is sort of what you've got, and the right hand side is sort of where they came from. Now, oh by the way, this item, computers and other equipment, this can be called fixed assets or non-current assets. Some physical assets that cannot be converted into cash so easily. So during the month, there were several economic activities which causes some inflows and outflows of funds. You have 6 clients and you sold your website designing service to them. 2 of them paid in cash. 4 of them just promised you to pay later. There was also some cost. You paid rent and utilities, 700 pounds. You paid it in cash. You purchased some software and office supplies. You haven't paid them yet. You paid wage to yourself and to your assistant Andy. You also paid interest to your uncle. And the computers have got a little older, which is considered depreciation cost, which is 80 pounds. So if you subtract the total cost from the total sales, that is called net profit before tax. In this numerical example, it's 970 pounds. Let's say you had to pay tax 320 pounds, which is almost 30% of your net profit, so that the after-tax net profit is 970 minus 320 equal 650. This becomes retained earnings or earned surplus, which belongs to the shareholder. In this numerical example, you are the only shareholder, so this 650 pounds is the additional money that belongs to you. Now, these sales that haven't been paid yet, they are not cash yet. They become what is called accounts receivable. In this example, it's 2,200 in total. The cost that you haven't paid yet becomes what is called accounts payable, which is basically your short-term debt. You're supposed to pay before long. Now the question is, how much cash do you have left after all these activities? Well, 2 of your clients paid in cash. That's additional cash, 1,900 pounds. You also spent some cash to pay rent and utilities, 700 pounds. You also paid wage to yourself and to Andy, 1,200 pounds and 500 respectively. You also paid interest to your uncle, 50 pounds. You also paid tax in cash. That's 320 pounds. So after all these activities, the amount of cash you have actually decreased. You lost 870 pounds cash. So I guess your first goal is to become able to produce the balance sheet at the end of September. We had the balance sheet information at the end of August, and we know what happened during September. Based on these two pieces of information, you should be able to produce the balance sheet at the end of this period, which should look like this. You had cash £6,000, but the cash reduced by £870. So, the cash amount is now £5,130. You also have accounts receivable, £2,200, which hopefully become cash in the near future if your clients pay. The computers and other equipment, this used to be £4,000, but it has been reduced by £80 due to depreciation. So it is now £3,920. The total is £11,250. You still owe £5,000 to your uncle. You just paid interest. You didn't pay any principals back. Additionally, you have a short-term debt accounts payable of £600, which you're supposed to repay before long. You still keep £5,000 equity as a shareholder. In addition to that, there is retained earnings or earned surplus, £650, which belongs to you. So the total is £11,250. £5,600 belong to other people, and £5,650, this is equity which belongs to you as a shareholder. And remember, these two numbers, £11,250, these numbers should coincide between the right and the left. Okay?